Call it a holiday weekend hangover. Stocks falling on the first trading day of the week, with Apple leading tech declines right now sitting near session lows in the final hour of trade. Also hitting stocks, fading hopes of that aggressive rate cut by the Fed during the upcoming July policy meeting. This after that stronger than expected jobs report on Friday. And Myles, I mean, just when I thought Fed Chair Jay Powell's job was getting easier, like, all right, here, this market has told him this is what he has to do. He can go ahead and do it. Now he has this jobs report, and it's getting tougher for him again. I mean, he's going to be on Capitol Hill this Wednesday. And Thursday. And we get Fed minutes out on Wednesday. What does he have to do, I guess, this week?
I mean, there's nothing that... I'd say there's nothing he can do, right?
He's in a tough spot.
Well, I think it was always unrealistic that the Fed... Okay, is he in a tough spot? No, he's not in a tough spot. The market's like 1% below record highs, right? I think he's doing fine.
But he might have backed himself into a corner now.
Okay, but I think that...
Help me.
The market only got excited about a 50 basis point rate cut because, to our surprise at the time and still, all of a sudden economists across Wall Street started listening to their bond desks, and their bond desks were saying it's got to be 50 basis points. And there's really nothing about the way the Fed has behaved under Powell, which has been fairly deliberate, that would suggest they would get all creative with a 50 basis point rate cut. So if the market wants to be disappointed and we want to say market's down 0.4% today because the market is upset that it's not getting 50 basis points of relief at the end of the month, it's only going to get 25 basis points, and I don't really know what to tell you. What Powell's going to say is, we stand ready to act appropriately to support the expansion. That has kind of been the new Fed line. We will act to elongate the economic expansion is how they are justifying their likely action. And I don't think it's that big a deal that the market's disappointed about not getting 50, because I thought that was kind of uncalled for.
Yeah, but I think if the Fed does not cut rates by 25 basis points at least by the end of the month, that'll be a huge disappointment here for a lot of investors, just for the market in general. And we do see risks to the downside there if that, in fact, does go through. So I think it is interesting just from a perspective just to look at how Jay Powell has kind of backed himself into this corner at this point. He's very dependent. He doesn't want to disappoint the markets. He has seen how that has happened time and time again. I don't know if you could say screwed up, but he has seen how it could react over the past, 18 months or so. So I think that he's in a position where he doesn't want to disappoint the markets, doesn't want to disappoint investors. So the fact that it's very likely that we will get some sort of rate cut. I think 50 basis points is almost off the table if you talk to a lot of analysts at this point. So I think 25 basis points is the most likely scenario. And then it's almost going to be status quo for the markets. I don't think we're going to see a huge reaction either way if that is the case.
And either way you slice it, it's something that we're going to be talking about. Everybody's going to be talking about as we lead up to Wednesday and Thursday, because with so much riding on what this cut, if this cut happens, everybody will be hanging on every word.